feeling unwell, I'll be taking over for her. And today we'll be doing the live trading session. Can everyone see and hear me? As well as see the slides. Okay then, if everyone's okay, why don't we start today's live trading session? Okay, all right, so here's the disclaimer. The information, context, opinions which are expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they don't constitute investment advice or consultation on how a client should trade. So Vantage does not actually guarantee the accuracy and reliability of the information provided herein. And also there's a risk warning, as you guys can see. And for those of you attending, you should note that the sessions are audio recorded and may be published in various media, including print, audio, video format, and without further notice. So you have details on Vantage. Now, let's move on. So this is our group of analysts. You can see I'm in the slide as well. Now, as starters, why don't we talk about what happened? So as for what happened, in the US, in the US market, in the US session, that is, the US non-farm payroll released on Friday was significantly better than expected. The actual was 528K. The forecast was 250K, with average hourly earnings climbing to 0.5% and the unemployment rate dropping slightly to 3.5% from 3.6%. The US dollar gained against all major currencies following this strong unemployment data, while the US equity market did by the close of the trading session. So that's what happened for the US sessions. Now that we talk about the US session, let's talk about what it means for the Asia session. Now, for the Asia session, look for the price to consolidate or to retrace briefly from the respective support levels before continuing to trade lower, with the US strength likely to continue. Now, so what happened across the Asia session? Now, most currencies traded in the consolidation through the Asia session, with the AUDUSD trading higher towards the near-term resistance level. And what does it mean for the Europe and US session? There's no major news event that are scheduled for the major currencies, which will lead to prices continue to retrace from the Friday move. Look for a possible resumption of the trend following the completion of current retracement. So this is what will happen. All right, so let's zoom right into the dollar index. So for dollar index, we have straight away three components. First component, key news event. Second component, what can we expect today? Third component, next 24 hours bias. So for the key news event, there's actually no major news event today. So what can we expect from the DXY today? So the DXY climbed off the 105.5 support level to reach the near-term resistance of 106.50 following the release of US employment data on Friday. So look for DXY to consolidate around the 106.5 support level and possibly test lower before testing higher towards the 107 resistance area. So let's look at the central bank notes. Now, for the central bank notes, the Federal Reserve hiked rates by 75 BPS, basis points. BPS means basis points, taking interest rate to 2.5%. The next meeting is on 22nd September 2022. Now, the balance sheet reduction plan to continue at 60B for treasuries and 35B for MBS over a 3-month time frame. So what's our next 24-hour bias? Our next 24-hour bias is weak bullish. So why don't we look at DXY for a moment. All right. Okay, great. Everyone can see it. So let's look at DXY for one moment. Now, as you can see, this I have a chart of the DXY, and DXY is has just broken the ascending trend line, and is and DXY has just broken the ascending trend line. Now, since DXY has just broken the ascending trend line, we are since just DXY has broken the ascending trend line, we are bearish. We have a bearish bias, but the thing is, notice how the price is moving above the Ichimoku indicator, and so that gives us a bullish bias actually. So should we go by the bullish bias, then we will expect like price to bounce off the first resistance and towards the second resistance. So but the thing is, like, what do you put a resistance there? So you can see that this one is actually there's actually like a overlap with a tiny swing high here and a swing high here, and then there's also a swing there's a swing low here which the key level is touching, and there's actually a pullback support. Now looking down, you can see another overlap support right here, swing high, and finally right here there's just a simple pullback support. Now then what you want to do is refine your these levels with Fibonacci. So what this Fibonacci levels will do is refine and create a zone for your key levels. Now so you can see that this is actually a let's blank it out for easier. Okay, all right, so first of all, we can see a 61.8 Fibonacci projection, but is this valid? What do you think, guys? The correct answer is no, this is not valid because price is broken through, and is therefore this trend line is no longer valid. Now next on hand, we have a couple of retracement level, and let's see whether this retracement level are valid. It's down actually. Anyway, it is retracement level valid. As you can see, price is broken through this 23.6% retracement. So 23.6% is no longer valid. The only one valid is 50%. 50% has not been broken and refines your second resistance. So say now, next we have a another retracement, and you see the same for 8.6. Is it valid? Yes, it is. It is valid. So it's an 8.6 helps to refine your second support. All right. So now that you guys seen the Fibonacci zones as well as our analysis, I'd like to move on to our next currency pair. So after DXY, what do we have? We have the Japanese yen. The next currency. So the next currency is Japanese yen. Now for Japanese yen, same thing as before. 3 components: key news events. What can we expect today in the next 24 hours by us? Firstly, we have key news events. Key news events. So for the first component, which is the key news event, there is actually no major news event. But the thing is, what can we expect for JPY today? So the USDJPY spike up from the support level of 133 to reach the 135.5 price region. However, the price of the USDJPY is likely to consolidate below the 135.50 level before a move to the upside. Look for the price to break strongly above the 135.50 price level before possibly reaching the next resistance level of 137.00. So besides what can we expect today, I would like to talk about a moment about the central bank notes. So the policy settings were actually unchanged with rates capped at negative 0.1%. And then for the Japanese bank actually reiterated that rates will stay low for the foreseeable future, but they wouldn't hesitate to add stimulus if the economy needs it. Now, where's the next meeting? Next meeting is actually on 22nd September 2022. And what's our next 24-hour bias? Our next 24-hour bias is medium bearish. Now, for gold. All right, before we go to gold, I'd like to take a moment to look at our charts. Now, for our okay, so first we want to do is find a trend. Let's see if we can find a trend on. Okay, I wanted a channel, but no channel. Remember, channel has to have a swing high, two swing highs, two swing lows on each side. So that's how a channel works. Anyway, when looking at this chart, I don't think I can find a trend or channel. And now let's look at this chart and let's see the bias. It's a bullish bias since price is moving above the Ichimoku indicator. So can see three different levels: second resistance here, first resistance here, and first support here. So now for second resistance, you can see that it's an overlap resistance because there's two swing high. Then it's a pullback resistance because there's swing low. Yep, right there is a pullback resistance. And then again, first support, also a pullback support. Actually, is a pullback support. Yeah, this is the first support, this is second support. And this is first resistance. All right. Anyway, so basically you have the two first supports and two supports level and one resistance level. Now, this is also the second support is also a pullback support. Now we want to refine it with Fibonacci levels. So for Fibonacci levels, is this a valid Fibonacci levels? What do you guys think? The answer is no, it's not, because price already broken it and it's no longer valid. Now, okay, you want to refine it with Fibonacci levels. So example could be from here. So let me give you guys an example of a Fibonacci. Okay, you can see a nice 38.2. Right, there's actually a 38.2 Fibonacci retracement right here that refines our first support. So with Fibonacci level, we can refine our zone. But for now, let's look at our analysis. So we see what we think will happen is we see the price to drop to first support, bounces off, go to first resistance. That is our analysis. USDJPY. All right, now let's look at our charts. Let's jump right back into our slides. Now, next on our slide is gold. So for gold, we have again three different components. First component, key news event. Second component, what can we expect today? Third component, next 24-hour bias. So first up, we have key news event. So key news event, is there any major news today? There is no major news today. So the second thing is, what can we expect from gold today? So gold prices have corrected sharply lower. Gold prices has corrected sharply lower from the 1794 resistance level to test the 1770 support level on Friday, with gold currently trading at 1775 as it continues to trade inversely to DXY. Now, look for price to consolidate at this support area. If the price continues to trade lower, look for price action to show possible rejection at this support to signal another climb towards the near-term resistance area of 1800. Now that you guys hear about the what can we expect from gold today, and as well as the key news, which there's no major news. So what do you think our next 24-hour bias is? Now, so our next 24-hour bias is actually weak bullish. So that's our analysis for gold, fundamental analysis for gold. Our next 24-hour bias is weak bullish. All right, so before I continue on to the gold charts, right, I'll ask you guys a question. So do you guys have any questions? That's my question. Yeah, so do you guys have any questions about what we have spoken now? Anything unclear about you'd like me to elaborate on? Feel free to ask. All right, so if there isn't, let's jump right back into the charts. Now for gold, go. Okay, found gold. Great. Now for gold, this oil, gold is right. Okay, great. Gold is right here. Now gold. Right. So basically, you can see, gold is quite obvious. There's an ascending trend line. Price is broken out of the ascending trend line. So we have a bearish bias. Yeah. MACD also says. MACD also has a. MACD also has a bearish bias here, and that's a very important point to note. Notice there's a bearish divergence. Price increasing from here to here, whereas price is decreasing from here to here. So there's actually a bearish divergence here. Now, all this leads to our confirms and increases the percentage of our percentage of our correctness of our analysis for it to have a bearish bias. Now, so basically, what my analysis here is basically you have three different key levels again. So here is a pullback support. Here's another pullback support. Here's another pullback overlap resistance, actually. My bad. Now, so basically what I expected. So let's notice the Fibonacci retracement here, 23.6 retracement, and also a 50% retracement. Are these retracement levels valid? Yes, they are. They are valid. Now, what I expect here is basically price to drop to the sell entry once that we have downside confirmation that price has broken the entry structure. We will expect bearish momentum to carry price to take profit. So that's our analysis for gold. In terms of charts, technical analysis that is. Okay, now let's jump right back into the fundamental analysis. So next up we have Euro. So for Euro, notice there are three components: key news event. What can we expect today? Next 24-hour bias. Same thing again. Three key event three components. Now for the first component, key news event. Is there any major key events today? No, there isn't. There's no major key news event today. So what can we expect for EUR today? So the EURUSD traded lower following the US NFP data release, with price testing near-term support of 1.01555. Although the EURUSD retraced higher at the end of the trading session last week, the price still remains under the 1.019 resistance level. Look for EURUSD to trade lower, and if the DXY strengthens further, confirmation of a sustained move to the downside move is signal if the EURUSD closes at below the 1.012 support level. So that's for EURUSD. Now let's go and study the central bank notes. Now the central bank notes, they stated they have raised the rates by 50 BPS. BPS is basis points. And what's the next meeting? The next meeting is on 8 September 2022. So what's our next 24-hour bias for EUR? So we are medium bearish for the EUR. Okay, that's the Euro. So without further ado, jump right back into the charts for technical analysis. Okay. So a couple of things I would like you guys to see here. Oh my. Okay. So a couple of things I would like you guys to see here. So we see three key levels. Our first key level is here with the overlap support here, pullback support here. The take profit is a swing high resistance. Now, but we need to confirm. Yeah. So let's have our Fibonacci levels first to further refine our zones. So for take profit, we have the 50% Fibonacci retracement. It lines up nicely, and then we also have the 61.8 retracement level that lines up nicely here. So this helps to refine our zone. In order for us to confirm our bullish bias, let's have our indicator. So let's look at the RSI. Okay, let's look at stochastic. Notice how the stochastic is. Price is expected to bounce off the stochastic support. Price is expected to bounce off the stochastic. It's approaching the stochastic support and is expected to bounce off it. So hence we have bullish bias. It confirms our bullish bias, and what we expect to happen is basically price to drop to the buy entry before rising up to the take profit. So that's what we expect to happen. And next, let's jump right back into our slides. Swiss franc. So for the Swiss franc, again, three components. The key news event, what can we expect today, and the next 24-hour bias. So for the key news event, we have no major news today. What can we expect for the CHF today, the franc today? So over at the USD CHF actually traded lower to reach the 0.9540 price level. However, as the price feared to break the support level, look for some outward corrections from the current downtrend. If price is able to trade above the 0.9550 price level, it could climb towards the near-term resistance level of 0.97 resistance level. The USD CHF has bounced off the 0.9540 support level to climb higher towards the key resistance area of 0.9650 due to the BXY strength. Look for price to break below the 0.96 support level to signal a deeper retrace towards the 0.9570 interim price level. So let's look at the central bank notes for the CHF. For the central bank notes, there's a price rate hike of by 50 BPS to negative 0.25%. So where's the next meeting for the Swiss franc? It's on 22nd September 2022. There is 22 September 2022. Now, based on what I said regarding what we can expect for CHF today, what do you guys think what the next 24-hour bias is? If you guys are unsure, the next 24-hour bias is weak bullish. So now that I know about the CHF, let's jump back into the technical analysis. Okay, so for the technical analysis, we have it right here. Okay, so let's look at this. Okay, you notice that price is just reversed off the stochastic resistance. But so we have a bearish bias that price will drop to the price will drop to this level before once the price has broken this level, we will expect bearish momentum to carry it to the next support level. So this is the first support level and this is the second support level. Alternative price could rise to the resistance level over there. So there's actually two cases. One price drops to here and breaks here. We expect bearish momentum to carry price to here. Alternative price could rise to here. All right. So but the thing is, we also need some Fibonacci to refine the levels. So example would be like this. See, notice how Fibonacci lines are nicely here. And there's a 61.8 retracement at our first support here. So this actually is our analysis for USD CHF. Now let's jump right back into the slides for fundamental analysis. All right, now let's go for pound. Oh, notice there's a person who has a lag. Is anyone else facing a lag here? Okay. I'll see what I can do on my end. But is anyone else facing a lag as well? Okay. So let's look at pound. So for pound, again, three components for pound. So is there any key news event today? There is no major key news event today. So what can we expect from GBP on Friday? GBPUSD traded lower but found support at the 1.2055 level. As price retraces, look for GBPUSD to consolidate around the support level before a potential break to the downside. If the price closes strongly below 1.0255, the GBPUSD could trade lower towards the next support level of 1.1920. Alternatively, if the support level holds, the GBPUSD could correct strongly to the upside to retest the 1.22 resistance level. So now for our central bank notes. So interest rate is currently at 1.75%. The peak inflation revised to more than 15% in 2023. And when's on the next meeting? Next meeting is on 15 September 2022. So now that you've heard all this, what we expect from the GBPUSD as well as central bank notes, what do you guys think the next 24-hour bias is? If you guys answer, the next 24-hour bias for GBP is weak bearish. Now let's jump right back out to the technical analysis. GBPUSD. All right, for GBPUSD, we can see that price has broken out of the ascending channel and is reversing off the Ichimoku cloud. So we have three levels again, two resistance level and one support level. Three resistance level. Three resistance level. That's just resistance dotted. Anyway, there's one support level right here. Anyway, so we have a support level right here, and let's see, have an intermediate resistance here, and our first resistance, second resistance. But so what we expect happen actually, let's have our intermediate. This is our first resistance actually. Yep, and then this is our second, and it's our third actually. All right, so anyway, what we expect to happen is price to we have obviously a bearish bias, so price will hit the first support. If price breaks first support, maybe you can have our second support here. So okay, so basically what happened is we expect we have a bearish bias, obviously. It's confirmed that price is reversing off our Ichimoku indicator, Ichimoku cloud. So price will drop to first support. If price breaks first support, we will expect bearish bias to carry price to second support. Once again, we have to refine it with some Fibonacci levels. Okay, so there's a 61.8 right here for our second support. So that's how you use your Fibonacci levels to refine your key levels into zones. Now, that is all for our technical analysis for GBPUSD. And now let's go to AUD. Now for AUD, right, for AUD, three components once again. Firstly, we had a key news event. Secondly, what can we expect from the AUD? And what's our 24 hours bias for AUD? Now, for 24, firstly, for a key news event, there's actually no major news event for AUD. And what can we expect for AUD today? The AUDUSD has retraced its decline on Friday to trade at the 0.6920 price level as the RBA continues to signal hawkish intent with its recent adjustment of its rates policy. Look for potential further recovery in the AUDUSD. Its price climbs above the 0.6940 price level. The AUDUSD could rise to near-term resistance of 0.6960 before resuming the downtrend. Central bank notes is there's a possible 25 to 50 BPS rate hike, basis points rate hike. And when's the next meeting? Is on 6 September 2022. So the 24-hour bias for AUD is weak bullish. Back to our charts. So back to our charts, we actually have back to our charts, we see we have actually we have AUDUSD. And notice the how price is broken out of the descending trend line. All right, so but is this a valid trend line even though price is broken out of the descending trend line? Is it a valid trend line? No, there's only 2 touches. In order for a trend line to be valid, you need 3 touches. So let's look at I would like direct attention to the stochastic indicator. Notice how price is approaching the resistance level and is expected to reverse off the resistance level. So actually we have a bearish bias. So we expect here is basically price to drop to first support before breaking first support and going to second support. So once if it breaks first support, we expect bearish momentum to carry to second support. Alternatively, that's our case for now. Our case 2 could be price could rise to first resistance level. Now, notice how we refine our levels using Fibonacci. Example over here, we have a 61.8 retracement level that refines our first resistance. And over here, we have a 50% retracement level that refines our second resistance. And that's not all. Apparently, we also have a 68.6 projection level to refine our second support as well. That's our Fibonacci levels to help to refine our key levels. Now, now that you heard about the case 1, case 2, as well as our Fibonacci and key levels and indicators, I hope you guys can understand how we conduct analysis for AUD USD. Next, let's jump right back into our slides. So back to slides, we have Kiwi dollars and ZACD. All right, for Kiwi dollars, we have three components once again. Key news event, what can we expect today, and next 24 hours. For key news event, there's actually no major news event today. What can we expect today? So through Friday's trading session, the NZD USD saw significant downside pressure as the price fell to reach the 0.6220 support level as the DXY strengthened following the release of US employment data. We have major news events today. The NZD USD could find support at the 0.6235 level to retrace towards the 0.6265 level before resuming the downtrend. Now, for our central bank notes, we actually can glimpse a few things for our central bank notes. Firstly, cash rate stands at 2.5% following a 50 basis point rate hike in the July meeting. So they expect near-term inflation to rise with the lower economic activity. So where's the next meeting? Next meeting is on 17 August 2022. So based on what I've said, what do you guys think that the next 24-hour bias is? Okay, I received answer, weak bearish. And you are correct. It's actually correct. Yeah, weak bearish. Now that we talk about the fundamentals, let's jump back out to the technicals. All right, so for technicals, okay, for technicals, now obviously you can see right here, price is broken out of the ascending trend line. Although this, but is this ascending trend line valid? I would say no, because there's only two swing lows touching it, so therefore it is not valid. But that's okay. We have our, let's look at Ichimoku. Price is reversing off the Ichimoku indicator. So what we expect is price to drop to the first support. Once price is broken the first support, we will expect price to go to the intermediate support. And once price has broken past the intermediate support, again, we expect bearish momentum to carry to the second support. Now, notice we have some Fibonacci levels to refine our levels. Firstly, we have the 50% retracement level to refine our first support. Is it valid? Yes, it is. 61.8, which is where our intermediate support is. And finally, we have the second support, which is actually a pullback support. Also, I forgot to say, this is a swing low support for our first support. Yeah, and then also 78.6 retracement level for our second support. Now, price alternatively, this is our case 2 scenario. Why is it just not was a case 1 scenario? Now, for our case 2 scenario, price could rise to the first resistance. The first resistance, where's the first resistance, is our swing high resistance. So this is our key levels. All right. So now that you guys know about the analysis here, we can see that it kind of aligns with our fundamentals on our bearish analysis. Okay, so let's jump right back into our slides. Now for CAD. So CAD meaning Canadian dollars, for you guys know, I'm that sure. So for Canadian dollars, again, 3 components, key news event, what can we expect today, next 24-hour buyers, key news event, there's actually no major news event, what can we expect from CAD today? So the USD CAD has traded significantly higher as it broke through above the 1.29 resistance level to reach 1.2985. This move was due to the weaker employment data for Canada and a surprisingly strong US NFP release. So as price retraces back towards the 1.29 level, look for a potential break of the support level to signify further downside back towards the 1.28 price level. Now, what's the central bank notes for the Canadian dollars? Increase rates by 100 BPS, taking interest rates to 2.5%. This increase further rates the central bank also indicated that further rates increases are likely. Now, the next meeting is on 7 September 2022. So what's our next 24-hour bias? It is medium bearish. Okay, let's jump right back out to our technical analysis. For USD CAD. Okay, we found it here. Excellent. Now, USD CAD, this is very nice. Price is broken out of the descending trend line. Let's see if we make this better. Okay. Yep, descending trend line. 3 swing highs, 1, 2, and 3. Yeah, okay, great. So basically, price is broken out the descending trend line. Now, so we have a bullish bias. Then we have our 3 key levels. Why this our take profit is always a pullback resistance. And then our buy entry is at a pullback resistance as well. And our stop loss is a pullback support. Now, what we expect price to do is to rise to the buy entry. Then should price break the entry structure, we expect bullish momentum to carry to take profit. So alternatively, this is our case 2 scenario. I thought our case 1. Our case 2 is we see price to drop to our stop loss. Now, notice we also have Fibonacci again. Once again, we have Fibonacci to refine our levels. So firstly, we have an extension. We have a, my bad, let me just adjust it properly. All right, so basically we have a projection. And in all this one, let's look at 100%. 100% is it valid? It is no longer valid because price is broken through it. So now let's look at our 50% retracement. Is the 50% retracement valid? Yes, it is. Price is not broken through it. So this is our analysis for our USD. Basically, price to rise, hit buy entry, break buy entry, bullish momentum rise to take profit. Alternatively, it could drop to stop loss. So yeah, we have a 50% Fibonacci retracement for this analysis. So that's our technical analysis. But let's so it differs from our fundamental analysis. So this is a point that you guys also should take note. Now let's jump back right into our slides for oil. Now for oil, we have our key news event. What can we expect today and our next 24-hour buyers? So 3 components again. First key news event. There's no major news event. What can we expect from oil today? So during the Friday trading session, energy prices traded in consolidation at a key support level, with prices currently at 99 for Brent and 91 for WTI. So look for further retrace on Brent and WTI before a potential resumption of the downtrend, with 90 and 85 as the next key support levels for Brent and WTI respectively. So what's the next 24-hour bias? It is medium bearish. This is our next 24-hour bias for crude oil. Okay, we come to the end of our slides and let's jump right back into our technical analysis for oil. Okay, got it. Nice. X. Now, okay, so let's look at our analysis here. So as you can see, price is actually bouncing off the support level. So this gives us a bullish bias. Now, notice the three key levels. Take profit is at a pullback resistance. Our buy entry is also at a pullback resistance, and our stop loss is at a swing low support. So expect here is price to rise to the buy entry. Should it break buy entry, we expect bullish movement to carry to take profit. Now we have 38.2 retracement level for our take profit. Also, we have 23.6 retracement level for our take profit. So that's analysis. So case one, case two. Case one, as I said before, a rise to buy entry, breaks buy entry, bullish movement to carry to take profit. Alternatively, it could drop to stop loss. That's our case two. Now that we are done with our slides and stuff, we take a moment to look at other different assets. All right, let's look at DJI. I think DJI is a excellent one to look at. So for DJI, can see that our price is moving above the Ichimoku indicator. Oh, okay. I see something about listing the important FIB levels. Okay, great. So yeah, sure, no problem. I'll list out I'll show you the FIB levels right here. Yeah. For our example, for our DJI, in this case US30, yeah. Yeah, I can show you the different Fibonacci retracement, extension, projection levels, right? Different levels here, no problem. So let's look at this DJI US30. So basically we have three key levels. So first key level is at the take profit. See where is it? Swing high. And yeah, buy entry is at another key level is a pullback support. And then stop loss is also a pullback support. Now notice price is moving above the Ichimoku indicator, so we have a bullish bias. Now Fibonacci levels, no problem. Let's go one by one. I think it's very fruitful and helpful for the for you guys here. We'll list it for one by one. All right, let's go one by one. So firstly, we have an expansion, my bad. 61.8 expansion. We're here to our take profit. Now, how does the expansion works? Maybe I'll just draw out roughly. Let me just go to the here. Okay, here. So example, ignore this thing, I just need a clear space. So basically, so for our expansion, in order for expansion to be valid, price has to hit the 50%, which is similar. For this one to be valid, for your minus 27.2 and minus 61.8 expansion level to be valid, price to hit the 50% retracement level. Also, the same thing can be applied to extension. In order for the extension to be valid, here, extension to be valid, price once again has to hit the 50% level. So if price only reaches the let's say the 38.2 level, only reaches 38.2 level. Let's say price is at 38.2 level, the extension and expansion will not be valid. All right, okay. So now let's go back to the chart. So you have an extension level right here, expansion level right here, a negative 61.8 expansion, and notice price has already gone past the 50%. right? It broke past the 50% retracement level. So therefore, this expansion level is valid. Now, let's look at the next one. Let's look at this guy is a retracement level. Now, the 8.2 retracement right here at our stop loss. Next is a projection. So we are projecting in this swing high, this swing low, this swing high. Now, say 8.6 for our stop loss again. And finally, we have both an extension and expansion. Obviously, when we pass the 50% retracement level, so with the extension here and expansion here for our take profit stop loss there. So that is our technical analysis. So we expect is basically price to drop to the buy entry before rising to the take profit, or case 2 scenario, drop to the buy entry and break past the buy entry. Well, if it's break past the entry structure, we expect bearish momentum to carry it to the stop loss right here. Is there any questions so far? Anything you guys don't understand? Okay, if there's nothing you guys don't understand, let's move on to another chart. Okay, how a fan favorite? Bitcoin. So for Bitcoin, again, this is our so this is first thing we want to do when we jump into analysis is to identify the trend. So you can see this is a bullish. We have a bullish channel here, 2 swing highs, 2 swing lows. This channel is valid. Next, we look at the RSI. It confirms our bullish bias. Notice how RSI is moving along an ascending trend line, confirms bias. Next, we have our key levels. Why this key level here? Swing high, resistance. Pull back. This one is buy entry. Pull back. Support. Stop loss, swing low, support. Now, let's go through our thing. So, we have projection first, 61.8 projection, and 61.8 projection and 100% projection. The 61.8 projection is for to refine our buy entry zone, and the 100% projection is to refine our stop loss zone. Now, next we have a retracement. 61.8 retracement to refine our buy entry zone. Next, we have our projection, 61.8 projection to refine our take profit. Okay, we have our various retracement levels here. Retracement levels, projection levels here. This helps to refine our zone in totality. So case 1, rise to take profit. Case 2, it breaks our entry structure and bearish momentum will carry it to the stop loss. This is our Bitcoin analysis. Okay, now let's look at our DEX. Our DEX right here. Now DEX, okay, DEX, yep, ascending trend line straight away and above the Ichimoku indicator. So what do we get? We get bullish bias. Now, let's look at our Fibonacci levels. So firstly, you have 8.6. Let's look at DX. Okay, I got a question on the risk reward ratio on the DEX. Is it worth it? So if you are wondering whether the risk reward ratio for the US30, you're asking US30, right? Yeah, you're asking for US30, right? Is the risk reward ratio on the US30 on the DEX? Never mind. US30, right? If I'm not wrong. US30, USD. Give me one moment. Let me find my DJI. All right, okay, good. Yep. Great. So you're asking if this risk-reward ratio for the US30. So no problem. Very easy way to find this thing out. Okay, so for our US30, we just bring out the we can easily bring out the long position risk-reward ratio thing here. So basically you see that the risk-reward ratio is 1.11 if you're asking, you're wondering about US30. So it's actually, yeah, it's worth it. You have actually you have more reward in your risk. So for every 100% of risk, you actually are receiving 111% reward. So it's worth it for US30. Now let's go back to our DEX. Okay, let's look at the risk reward here as well. Here is actually, it should be better, I think. Yeah, you see, 1.7. So it's better. So every 100% of risk, you're actually receiving 170% of reward. Here's actually better. All right. Now, let's go back to our Fibonacci. I think I was at the projection. Right, okay, projection. So set 8.6 projection here for our second resistance. Set 8.6 retracement for our second resistance. And then the 23.6 retracement level for our first support. And finally, 100% projection for our first support. Now, what we expect here is basically price to break the first resistance and bullish momentum carry to second resistance. And alternatively, price could just drop to first support. So this is our analysis for our DEX index. All right. Okay, I hope you guys have learned from the live trading analysis today. And we'll come to our webinar. And finally, I hope to see you guys again next week. All right. Bye, guys. And thank you.